Today's guest is Jayson Kim. Jayson is a general partner at Legendary Ventures, an American venture capital firm focused on investing in the consumer, retail, and technology ventures. Their major investments include the aerospace company SpaceX of Elon Musk, Pinterest, and Toy Box Labs. Hi, Jayson. Thank you so much for joining us today.
Yeah, thank you for inviting me, David. Yeah, I'm very happy to be on your show, and I really appreciate you inviting me today.
Yeah, it's my honor to have you on my show. Let's get it started by telling a little bit about yourself and your journey to founding the Legendary Venture.
Sure. Yeah, my background is fairly simple. I was born and raised in New York. I'm a lawyer by trade. I went to Columbia, and when I graduated, I was an M&A attorney for a little bit before I joined a family office that was fairly entrepreneurial. That was selling a lot of interesting merchandise over direct mail. They pivoted their business and eventually became a fashion clothing catalog, which most consumers now know as J.Crew, which is the American retail brand. I was with that family until they exited early. I then went into private equity with the acquirer that purchased us. Spent more time than I wanted to in private equity. Then eventually I left that about 10 years ago to co-found a venture firm with some of my other partners that I've known and worked with all throughout my career. And currently I'm a general partner at Legendary Ventures that really focuses pretty much on making consumer retail technology investments globally, right? And we're fairly interesting in the sense that we do early stage investments from pre-seed all the way to late stage ventures. So if you look at our portfolio, we're fairly wide. We own everything from beverage businesses to SpaceX, with kind of the intersection and the connection points being around consumer.
Yeah, that is very interesting. Actually, I read the news that the Legendary Venture made an investment in the SpaceX of Elon Musk, right?
Yes, yeah, that was a very big investment for us. It was a late stage investment. We as a firm try to look for anything that might have a consumer impact. So, whether it's, we generally like to look at things that have some sort of transactional model, which is a retail component of it. Obviously there has to be some technology, whether it's IP or process that's unique to give that company some sort of market advantage. But in the case of SpaceX, we really believed in their satellite business, right? So it's really great that they're really trying to do space, deep orbit kind of aerospace, kind of vision of an aerospace industry. But, we primarily invested in them because we really believe in their kind of consumer ISP and the constellation business, which I think is going to be very relevant to consumers at some point in the future.
I see. Got it. But I don't know all the detail of the business plan of SpaceX, but I only understand a very high level. But I can imagine it is a very long-term project, right? Long-term time frame project to achieve and build a very ambitious plan. What is the exit plan for the SpaceX?
That's a great question. I think every startup, whether you're a VC or you're a founder, right? I think the expectation is, and this is a personal experience, is that no business takes a few years to build. It's always going to take 10 to 15 years. And so if you look at SpaceX, as an example, that business has been around for almost 20 years. People think that it's been around for the last few years because it's been highly publicized in media, but people don't really understand that Elon has been building that business since the early 2000s. And I think it's only coming to light in the last couple of years, right? With the success in Tesla and some of his other business ventures. So, from our perspective, we view it as a long-term investment. This might take, the satellite business might take another 5 to 7 years to really fully get to market and have some commercial value to it. And the rest of their businesses will probably then follow on after that. So, we're long-term investors. We don't really invest in any companies that we think that won't have a minimum of a 10 to 15 year kind of horizon to that business. If that answers your question.
Yeah, I think that is a very good propositioning for the early stage entrepreneur who want to raise money with the patient capital.
Yes, definitely. I think there's a lot of people who look for short-term liquidity,
Yes.
and I think most people should realize when you're investing at a venture level, which is kind of the early stages, right? It's the minor leagues of later stages, private equity, growth equity, whatever you want to call it. You're really investing in the founder and the concept and the idea, and you're hoping that over a 15, 20-year horizon, that something develops out of that. And you have to
Yeah.
really believe in that to make that investment. Excuse me. If you don't, then you're probably in the wrong investment or in the wrong asset class as an investment.
Yeah, that sounds very great. I mean, I have been in the corporate investment banking world all the time. I always thought that like a banking or the commercial lender, investor, including venture capital, even though we have hundred thousands of the, I mean, institution and lender investor in the world, pretty much everybody has a similar underwriting process and focusing on the same thing and the same checklist. That's what I always felt. So we need to have a more diverse investor with a different approach.
Yes, I think an investment is an investment, right? At the end of the day, because David, you have tons of experience in corporate finance, but I think what differentiates the classes, or at least the asset types in investing, is really, to your point, the time horizon on the investment, right? And so the earlier you are, the more you have to be, you have more elasticity you have to have in building in that, and really envisioning that business model to be actualized over a certain period of time. Whereas as you get higher in that kind of food chain, you can have less of that kind of certainty. You know what I mean? In terms of
Yes.
whether it's going to materialize or not. And so for us as a venture firm, we try to diversify our fund by investing in all stages, right? So as a fund, we're stage agnostic, we're model agnostic. We have a tremendous focus on our founders because we believe in them. And you'd be surprised at how many founders who are passionate about what they're doing can succeed, even if their business models aren't as strong. I mean, if you and I started a company tomorrow and we were passionate and we could sustain, some longevity with that, then I would argue that we would probably do better than some other founders who had a better idea, but they couldn't execute it very well. So, it's a trade-off there. But we as a firm try to invest in all stages. We go from early to mid to late. We feel that doing that balances out our fund. So, we're more than happy to make investments into pre-seed companies that have really great ideas, on one end of that spectrum. And then on the other, we're more than happy to do late stage investments like SpaceX that have spent 15 years building out their business model. And they're probably on their last 10 years of trying to actualize revenue against that model, if that makes any sense.
Got you. Beside the SpaceX, did you have any interesting portfolio company and you're bullish about? And if, one or two, then why you made investment in that?
Yeah, so beyond the, obviously, like to your point, SpaceX is a very highly branded name, right? But
Yes.
beyond those types of companies, we do a range of early stage companies that I think maybe some people have heard of, but not as branded, right? So we've done investments into companies like Gemist, Toybox. Gemist is a kind of try and buy next generation jewelry brand. So what they allow, it's led by a female founder. She's created an interesting business model where women can go and customize their jewelry, their kind of wedding engagement rings and jewelry pieces for special occasions, have replicas of that sent to their house to see if they like it. And if they like it, they can go back online and make the purchase. And I think that's kind of interesting, especially given the age of COVID, where people are more sensitive about shopping from home versus actually going in store, and kind of transcending that, digital versus physical space in terms of, in-person shopping. And that's doing extraordinarily well. It was backed by De Beers, which is a very large diamond company, because they kind of believe that that's kind of the next generation of shopping. Another business that we invested in that I love personally is called Toybox.
Yep.
They created a 3D printing machine for children and program thousands of toys so that they can actually just print toys at home versus going into a toy store to buy the same toy over and over again. So I think what's really interesting about the early stage businesses that we invest in is that they're quite disruptive in the sense that they are adapting to shifts in consumer behavior, if that makes any sense. So if you look at this generationally, right, every generation has had some sort of behavior associated with it. So if you go back 30 years ago, a lot of people like going, out and having that kind of social interaction to make purchases in store. If you look at it 20 years ago, people like more service-oriented businesses where they were getting services or they were trying to buy things, but people were tailoring things to them. If you look at the present, especially now in the context of COVID, a lot more people want that personalization without having the inconvenience of going to different places to try to find what they're looking for. And so I think if you look at a lot of these companies that we've invested in, like Toybox and Gemist, they have those components in that user experience, right? So where people like me and you and other families or whoever it might be can enjoy the convenience of shopping and getting what they want, getting highly customized, value-added products without having to go and search for it or without having to go in store to necessarily find that product, right? So inventory as a function of competition is becoming much more ubiquitous and it's becoming less important, right? Which is kind of what built the Amazon model.
Yeah. Yes, though that toy with the 3D printer idea sounds like very exciting and innovative.
It's very fun. Yeah, it's very fun. I mean, that company is really taking off now. They've in fact they were able to acquire licenses from a lot of the major Hollywood studios. So they could start now, kids could start printing Batmans and G.I. Joes. So it's a very interesting model, right? I mean, the traditional model, me and you, I don't know, I don't have children, but if you have a family and children, if you wanted to buy toys for them, they would go into a toy store and you would have to constantly buy the same thing and then keep going back to it. Now you can print from your house. And I think that's an interesting proposition.
Yes, I agree. But I have children, but my children already graduate from university, so they don't play with the toy any longer.
They're not playing for toys. Yeah, exactly.
Yeah.
So
Okay.
Well, if your kids have kids, and they can buy these machines now, right? It's a different world now. Yeah.
How much does it cost, a 3D printer? Curious.
Yeah, what's crazy is that particular product is, I think the opening retail price is $299.
Oh my God! How come it is so cheap like that?
Yeah, I mean, I
cannot imagine. I cannot believe.
Yeah, it was hard for me to believe it too. When I first ran into the company, I said, "What? Why is it so cheap?" Because if you think about it,
cheaper than ordinary printer, right?
Yeah, exactly. If you and I think about it, if we had children, we'd probably buy at least, a toy would probably be at least $10, right? So, I mean, and we'd probably go in there at least 15, 20 times to buy different types of toys for them, right? If not, that's the average unit retail. So $299 is pretty cheap in my opinion, because you can print 2,000 toys. So the value proposition is there. So I'm in agreement with you. I thought they priced it too low, but that's what they're doing.
Yeah, actually, if I'm the investor, venture capitalist, listening to their pitch presentation, probably that's my first question: is how much does that cost? Then if it costs $2,000, $5,000, then doesn't make it very difficult to take off, right?
Yeah, I actually had the same feeling that you had. My first inclination was that it was actually priced too low, but I realized their strategy. Their strategy is not to prohibit people from accessing this type of technology. They wanted to make it, and that's why we invested in them. They wanted to go mass consumer versus specialty retail. They wanted to make it available to as many consumers as possible, sacrificing their profits so they have more market penetration. And I think that was the right strategy, right? I mean, it's more important for people to use the product than to outprice the market. You know what I mean? Where it becomes useless to people. So I believed, if they're not losing money and they're close to break even and they can actually get people to enjoy it, I think that's the right strategy, and I support that.
Yep. I saw that you're serving on the board of the large company like Nokia. Actually, culture is something I'm very interested. Even I mean, I invested and financed a lot of large and company as well as SME. I think culture is a very difficult part. I mean, for a company when they grow the business, they need to change and transform the culture again and again. Otherwise, it's very difficult for them to continue the success. So my next question is. What do you think about the typical issue of synergy between the large company and startup? Because I have seen that a lot of large conglomerate tech giant, including the those like Microsoft, Google, they acquired a great startup, paying the huge money. But at the end of the day, they had so many failed cases. So, what do you think in order to successfully integrate the startup successful with the successful business model and track record,
Yeah.
and integrate them into the large group and the grow together? What is your advice?
I think this is one of the most difficult questions that anybody can pose. So I feel I feel that you're putting me on the hot seat immediately. But I'll answer it this way because you're a good friend also, and I have tremendous respect for you. I think at the end of the day, it's clear, right? I mean, once you become a big company, you cannot criticize big companies for being slow because they have a lot of, the bigger you get, the more complexity you have in your business, and the more time you have to spend on administrative regulatory overhead, right? So it goes to say that they're not going to be able to innovate better than the startups, right? And that's always the concern. And growth through acquisition is kind of an interesting strategy. And culturally, I think the acquisitions that work are the ones where they share similar values, like you said. So if you've got a nimble company that's used to being very quick and deploying quickly and actualizing market opportunities very quickly, and you're with a bigger company that doesn't know how to do that, I think obviously there's going to be problems, right?
Yes.
But if you're with companies that were built by founders who are quick and nimble, and they were smart enough to structure and matrix their organizations in a way that they can respond to that, then I think they'll do extremely well. And so, I'll give you an example of this. I think Apple is an extraordinarily successful company in making very targeted, precise acquisitions that conform not only to their values or their belief system, but also as an organization that they're very, very well structured to handle that from a business development and integration standpoint. So meaning they're not going to buy a company and just stick them into a division and hope that it works out, right? They will allow them to operate with some autonomy while leveraging the best and really trying to match up the synergies between the two companies and the product offerings, as opposed to some larger companies. I think Salesforce is another one of them. I think that's kind of on the other spectrum where they acquire really to be competitive and not to be, and this is just my opinion, right? I mean, this is a very strong opinion, but I think in certain cases like Salesforce, they have not as good of a record as an Apple or a Google because they just don't know how to integrate them well, to your point, because their intent in the acquisition is to really freeze people out of competition. So it really comes down to intent. And I'm being very honest with you on this call because I have a lot of respect for you. I think bigger companies that buy smaller companies, if their intent is to genuinely believe and to, really execute a relationship that they feel is synergetic and they really want to integrate their business and, that acquisitions, business or product services, and they feel that there's tremendous value in that, I think they're flexible enough to give them some autonomy to grow their own product base while making that integration so it works out. I think the companies that just don't know how to handle that, or maybe their intent is, it could be talent acquisition, it could be competition management, whatever it might be, if those are kind of the goals, they have a tendency of less working out. So I guess what I'm saying is that almost every acquisition you make is probably successful. Even the ones that you and I look at from a public standpoint that look like they failed, they're probably successful. It just depends on what the goals, and the objective of the acquirer is, if that makes any sense. You know what I mean?
Yep. Yes. I think we can talk about that topic a whole day. So I'm not
Yeah,
looking for the one right answer. It's quite very difficult. It's a part of the
yeah,
culture. Yeah.
it's very complex.
Yeah.
And I think all I'm saying is that even the ones that we think failed may have been viewed internally by those corporates as a success, depending on their goals and objectives of that acquisition, if that makes sense. And of the ones that truly wanted to really build their portfolio with that acquisition, I think they've made them work. So, I mean, if you go and analyze, let's say, for example, Google's acquisitions over the last 10 years, I bet you the ones that worked, they wanted to work. The ones that didn't work, there might have been other reasons that you and I are not privy to, that from a public standpoint, that made it seem like they didn't work, but they could have been viewed as a success internally. You know what I mean? For whatever reason.
Yes, yes. So another relevant question to this topic is I worked a Korean company a lot and the Korean financial institution and outside Korea. And what I have observed is Korean companies are doing very, very well, large operating and growing the large manufacturing system. And they're very good, like Samsung, LG, Hyundai, all those guys. But when they expand into the overseas market, I don't feel that they are doing okay relative to as compared to their successful operation inside Korea, right? So I think I think this is maybe a related to culture issue as well. So, what is your view on the international expansion strategy and their performance of Korean company versus American European counterpart?
Oh, that's another hard question. I think you're right. I think it's part culture. Globalization is tricky, right?
Yep.
So in this current cultural and context in this particular period of time, the world's gotten smaller with technology. And so on the one hand, I kind of believe that culture is not an issue in that sense because wherever the company is domiciled, it really doesn't matter if you're Samsung and you're based out of Korea, or you're GE or Microsoft or Google and you're an American company, right? I mean, all of our products touch everybody's lives. I mean, technology is so pervasive, it's cross-border. So from that sense, I don't believe it's cultural. I think it's more, I guess, market saturation and penetration. Like, for instance, you can argue that Samsung has been around for almost 100 years. It's, in the digital component of their business, they've been fairly active for the last 30 years. So they're not like, newcomers to the field, right? Whether it's their mobile business, semiconductors, I mean, they almost power everything. So they're very well penetrated in a lot of countries, including the US and even Africa as an emerging business, as an emerging continent. So you can make the case that they might not be doing as well sometimes because they're just over penetrated, right? And they just need to narrow their products and their assortment so they're more focused on what they're doing as a business, right? Versus trying to do everything and trying to be everything to everybody. On the other hand, you can make a case that is somewhat cultural, right? Like in the case of Google, you go back, you go reverse, right? And you take Google into Korea or into even China. There's a lot of restrictions. There's a lot of cultural issues. Like, for example, when I was working in private equity, and I was with some retail, hard goods apparel businesses, we realized when we try to expand into Europe, Northern Europe, specifically UAE, that it was culturally offensive to build products that were certain colors, like red, right? And so I think there's a mix of issues. So I think for the bigger conglomerates, you've got a lot, I don't know if culture is necessarily a factor with companies like Samsung and LG. They're so large that they're ubiquitous at this point. And I would argue if they're slowing in growth, it's probably because they're over assorted and they're trying to do too much, right? They've got so many businesses. If you look at Samsung, you and I are both Korean. I mean, they do everything from,
Yes.
They own everything from hotels to supermarkets to mobile phones. They're doing so much.
So diverse.
They're so diverse. They're over penetrated. It's being over skewed in a global economy, right? So you might make the case if you and I were on their management team, you might ask the question, what do we stand for? And what is our core business? And how do we really drive that, right? The broadening of our product assortment and our businesses does that volume really overcome the margins? And if that's not the case, maybe we should step back and see what we're really good at and focus on that. So I don't think the larger companies, it's a cultural issues. I think with the smaller mid-market corporates who are still in global expansion mode, it could be cultural, if that makes any sense, right?
Yes.
So yeah, so I don't think it's 100% cultural. I don't think it's 100% market penetration and saturation issues, but I think it's some combination of both, depending on the size of the company, its position in the global economy at much more of a macro level, and then you go from there. But in the case of some of the companies that you mentioned, I think it's clearly an over assortment issue. I mean, Samsung is a very well branded company,
Yes.
all around the world, and if they're slowing, I would argue it's just they're not very focused on what their core business should be in those
Right.
markets.
Yeah, I used to finance semiconductor equipment, so like Samsung, SK Hynix, or the Taiwanese, Japanese company. I learned from the semiconductor people is Samsung is so good at the process designing. So they're using the same equipment, same people, same design, but in terms of yield, productivity, and whatever, Samsung is much better than others. So like I call it the coordination between the human being and the machine. They are so good, but I thought it is good to scale the larger operation or the manufacturing system, but the coming up with the innovation and trying and new idea and technology, it may be some challenging. I mean, having that kind of culture.
Yeah, I definitely, there's that component of it, right? So beyond the macroeconomics of it, you also have supply chain innovation issues, right? So at a certain size, it becomes a logistical issue, trying to get all the raw materials and then having it build an efficient process to bring it to market and be competitive in those markets at a local level very quickly. So I agree with you. Yeah, I mean, that in itself is also a challenge, right? Like specifically, like you said, in semiconductors, where there's a shortage of semiconductor supply in the world globally, right? And those chips power everything from USBs to cars at this point,
Yes.
in the internet age.
We are living in a very difficult, challenging time, pandemic, and everybody used to talk about low-hanging fruit like ride-hailing, food delivery, e-commerce, and fintech, etc. What vertical or business do you expect? Do you think will experience explosive growth post-pandemic?
I think travel is going to come back. I know this is crazy, but I mean, in the current situation, most people don't want to travel. But I'm a big believer that what goes down must come up. And I'm a big believer that extremes usually have a tendency from a finance standpoint, or at least an investment standpoint, have the best risk reward ratio. So if you're looking at it at a micro level, you're seeing airlines come back very quickly, right? So if you looked at a lot of the major carriers and where their market capitalization pre-pandemic, they took huge hits and now they're coming back, right? This is kind of akin to the 2008 financial crisis in the US, where you saw banking stocks go to $1, $2 stocks, right? Which is unheard of because obviously their enterprise book value is considerably greater than their market capitalization. You knew that it was going to come back, and it did, right? I mean, I remember during 2008 when I saw Citigroup stock at I think $5 or $6. It's ridiculous. And you knew that it was going to come back up to 40, 45. So there's a little bit of hysteria. So I kind of believe, banking stocks are kind of the banking companies and industries in 2008 is akin to travel in the pandemic. I think a lot of anything that's related to travel will probably do well, which is why we also think SpaceX will do well long term with aerospace and kind of space travel and kind of galactic jumps, right? Like I kind of feel like Virgin is on top of that. I mean, to basically shorten a flight from what takes maybe 15 hours from here to Hong Kong or Narita or where you're in Asia versus where I'm in Tokyo, that might, if they were able to shorten that to 3 hours with a hypersonic jump, I think there's a tremendous amount of value with limited risk. So we think anything travel related is probably a good investment, whether that's, aerospace, aviation, that could also be consumer hard goods. There's a lot of interesting business models around, being able to even do travel wear, right? Where people can order clothing and rent clothing as they travel because if people don't want to pack. I know that sounds kind of far out there, but think about it, right? I mean, you and I, every time we go travel, we always forget to pack things, and we really don't want to pack a lot of things because it costs us money. Like if you and I packed everything that we wanted to, and we went to the airport for a vacation, we would probably end up spending another $120 on checking in baggage. So what if we could travel without it, get to a destination, and get into a subscription model where we could basically order all the clothes that we need for that vacation, right? And then just send it back and not have to carry it with us. I mean, the cost of renting those, those outfits and those accessories and what other supplies you might need might be actually cheaper than the cost of carrying that product from one destination to the other. So there's all this innovation that's happening around travel as a theme, as an industry, from all different perspectives in the ecosystem, whether that's transportation, whether that's apparel and clothing, whether that's, hotel and lodging. So we think that's an interesting area to be in.
Got you. Yeah. I finished all the boring questions. So my my favorite question is, who is nicest person you have ever met in your life, and why? Besides your family member.
Okay, wow, you're asking really hard questions.
Sorry.
No, it's okay. I have to think about this one. I think the nicest person, the kindest person that I ever met, excluding my family members.
Yeah.
This excludes my friends too? Or is it just
friends is
members?
okay, family member. Otherwise, everybody talk about wife, right? Because they have to do. They have to do.
Yeah, or they get divorced, right? Yeah. Well, I mean, I think the kindest person, the most understanding, most compassionate person that's been in my life is one of my partners. His name is Jamie Driver. Mm-hmm. I met him 22 years ago when he started his company, which was a marketing media agency. After he got fired in at his job, and he started his own company out of his apartment. And when I first met him, he was pitching me when I was at J.Crew, and he was so small we couldn't give him the account, but he took the time to follow up with me, which is rare. And when he called me up, he said, "Hey, can you hang out with me, because you're a real nice guy and you were very honest with me and you seem like a really smart person." So I started hanging out with him, and over the year we became friends, and I think we became friends we spent more than a year before we started doing business together. But I think in the 22 years that I've been with him, he's never had a judgment against me, and vice versa. He's always been understanding. He's always put our friendship and our relationship beyond, any business or any material need. So I think, if I ever had a family member, or a brother, that would kind of be the person that I would want to be in my life. And I've been extraordinarily lucky that he's been in my life. But I think he's the kindest, nicest person that's ever been with me.
Yeah.
Outside of a family member.
Yeah, sounds like very good answer. Everybody is looking for that kind of relationship with the friends and people, but very hard because that's against the human DNA. But we are so focused on ourselves, right? And the short term as well. Yeah.
It's very hard. Yeah. I mean, I think as you get older, it's harder to find people who just genuinely want to care about you as a person, and that's just natural, right? Because, as you get older and you have more, you're more complexity in your life, you need more solutions to those to those problems. So it's very rare to find people that might want to just genuinely care about you for you. And I think, out of the 100 people that you and I might meet at any given period of our life now, we might find maybe, 2% of that, 2-3% of that might be people who just genuinely want you to be happy.
Yep.
And they don't want to be right. Right.
Yes.
And I've been fortunate. I've met some recent people in my life that, people recently that I feel that embody that. And so those people do exist. For everybody who's listening to this, podcast, I would tell you that not all hope is lost. There are good people in this world. You just have to spend time getting to know them and being open to the idea that they will care about you if you care about them. Here's my, this is my short advice is, in order for people to care about you, it doesn't matter if it's in business or in your personal life, it's investing or it's a founder or if it's someone that you love, you have to give. A lot of people
first
in this world,
give
a
first.
lot of people don't know how to give. You give
Yeah.
first and you do it unconditionally, and you do it knowing that you might not get it back. And
Right.
it's and those who give back are the ones care.
Right.
And that's a very hard thing to give first.
Yes. Thank you so much for taking time to introduce the legendary venture and your ambitious journey to growing the venture capital.
Yeah, no, thank you, David, for having me. And I really appreciate the time, and I enjoyed speaking with you. And you asked some great questions, and I
Thank you very much for listening to this episode. Don't forget to subscribe to the podcast, share with a friend, and drop me a review. Goodbye.